TradingView, IC Markets TradingView channel, as well as on YouTube. All right. Okay, great. So, should you have any questions or comments along the way, do not hesitate to drop your questions or queries in the respective live chat boxes. Right, I'll be monitoring the chat boxes as well. All right. Okay. Without further ado, let's get things going. Right, so once again, welcome to today's webinar brought to you by IC Markets. And topic is the Magnificent Seven. Right, before we start, please take note of the disclaimer. This is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs. They carry a high level of risk to your capital, and you should only trade with money you can afford to lose. All right, so my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, so here's the agenda for today. We'll take a brief look at the evolution of how the Magnificent Seven came about. And of course, we'll look at which are the stocks that make up this magical number. Right, then we'll also see why is so much importance being placed on them. How does it impact the entire US stock market or the main indices such as the S&P 500 and the Nasdaq 100. Then we'll do a quick review of their recent earnings as well. So in January and February, uh, we had the Q4 earnings of these respective companies that were released, so we can see how well they performed in the current quarter as well as the last 3 to 4 quarters as well. And then we'll wrap up today's webinar by performing some technical analysis on the main ETFs, which track the relevant indices like the S&P 500 and the Nasdaq 100. And of course, we'll do some analysis on the Magnificent Seven itself as well. All right, hi Ajay, good to see you. All right, okay, great. Yeah, so yeah, please drop any questions that you may have along the way. Yeah, should there be any. All right, okay. With that, let's get things going. All right, so a brief evolution of the Magnificent Seven. How did it come about? Right, okay, so it actually started in 2013. You may have heard of this CNBC TV presenter, right, Jim Cramer. He was credited with coming up with this acronym called FANG, FANG, right, in 2023, basically, which described the mega tech growth stocks that were popular during that period. So this is 2013, whereby we had Facebook, Amazon, Netflix, and Google. Back then, Facebook hadn't rebranded to Meta, so it was still known as Facebook. Amazon and Netflix and Google completed this quartet of mega cap high growth tech stocks. All right, then moving forward into 2017, Kramer then expanded the FANG to include another A, which was Apple, right? So you had Facebook, Apple, Amazon, Netflix, and Google. And now coming up to recent times in 2023, we had an analyst from Bank of America, Michael Hartnett. He began to use this phrase Magnificent Seven to describe high profile technology centric mega cap stocks that have come to be known now. So this Magnificent Seven name was coined or was got its inspiration from a 1960s Western movie, right? So if you've got some time and you like Western, so you could probably try and catch this Magnificent Seven movie in your spare time, right? So, in addition to these Magnificent Seven stocks being some of the most valuable companies in the US or in the entire stock market, they are all also focused largely on technology growth trends such as artificial intelligence, cloud computing, online gaming, as well as cutting edge software and hardware services or devices. The hardware devices, software services. Uh, Can you use okay? Just a question. There's a question on. Hmm. All right. Okay. There seems to be some issue with streaming onto TradingView. Well, apologies for that. I'm not too sure why. However, if you do head on over to the YouTube page for IC Markets, you should be able to catch this stream on YouTube as well. I'm not too sure what the issue seems to be. All right, okay. I unfortunately can't seem to see what is the issue with streaming onto TradingView. But yeah, perhaps you could head on over to the YouTube website. Let me see if I can drop the link for you so you can come over here. All right, here. Okay, I just dropped the link for you here, the chat box. Okay, right. Apologies if you're unable to view the webinar on TradingView for some reason. The stream is not flowing through. So, however, I dropped the link here so you can go on head over to YouTube and watch it on YouTube. All right. Right. Okay. Sorry. Okay. So just drop the link on TradingView. So whoever was viewing it over on that platform can now head on over to YouTube and catch it here. All right. Yes. All right. Thanks, Shahzad. Yep. I can see it's working here as well, but for some reason, streaming on YouTube. Sorry, on IC Markets. All right. Okay. Anyways, let's get back to uh, the presentation. All right. Let's get back to the webinar. All right. All right. Great. Hi, Peter. Good to see you. All right. Great. Okay. So we've had a quick look at the evolution of how the Magnificent Seven stocks have come about. And based on current market cap, these are the rankings of the stocks based going from the highest to the lower. So in descending order, we have Microsoft with a market cap of 3.1 trillion US dollars, followed by Apple 2.7, Nvidia, which is the current market darling at 2.2, Alphabet at 1.8 trillion, Amazon 1.8 as well, Meta Platforms at 1.3, and the weakest of the bunch in terms of market capitalization and also year-to-date performance is Tesla, coming in at a measly 554 billion market cap. Right. So these are the stocks that make up the Magnificent Seven. Although out of this group, I would say majority of them have performed well since October and November of 2023. Apart from Tesla, Tesla has been the odd one out in this bunch. So there's maybe we could see Tesla being replaced in this lineup because if it's not performing as well as the other six stocks in this seven, in this magnificent seven, may not perhaps is not so magnificent in the current period. So it might be replaced by another big tech company eventually. All right. So why is so much importance placed on these companies? Well, first of all, to get an idea of that, we have to look at the respective ETFs that track the S&P 500 as well as the Nasdaq 100. Right. For those who may not be familiar with ETFs, uh, it is a fund that tracks the performance of the benchmark indices. So you can have the ETFs tracking various indices uh, in the US, in the EU, and across any security. So it doesn't have to be an equity index. Index. It can also be. You can also track commodities as well, right? And also bond instruments. So it's a variety. ETFs can be used to track a variety of asset classes. And so the SPY or the S&P 500 ETF is the one that tracks the performance of the S&P 500 index. Now, this index is a diversified large cap US index that holds companies across all 11 major sectors such as information technology, financials, healthcare, energy, and utilities. Right, so this is the first ETF that was launched in 1993 and is or so it was one of the first ETF that was launched in the US, and this occurred in January 1993. Right. Okay. So why are the Magnificent Seven important? Because when you look at the top 10 holdings of the SPY ETF, right, you can see the first six are filled with Apple, Microsoft, Amazon, Nvidia, Alphabet, Class A, Meta, and then in the eighth position we have Tesla. Right. So you can see the weightage of the respective companies in this ETF as well. So when you add up the Magnificent Seven, they carry a total weight of just over 26%. So what this means is nearly a third of the entire weight of this ETF, right, uh, is held by these seven companies. So that means when these seven companies move up in a big way, it's going to pull up the entire ETF as well. Conversely, when these seven companies perform really badly, they're going to have a much larger impact as well on the ETF and pull it down as well. So do take note that ETF tracks the S&P 500 index, and because the weightage is also very similar to what how the index is also uh, how the index has also been derived or designed, right? So as you can see, the top sectors for the S&P 500 ETF or the SPY ETF is information technology at 29%, financials at 13%, healthcare also at about just over 12.5%, consumer discretionary, and so on and so forth. So when we see the Magnificent Seven moving up very strongly, it is going to pull up the entire S&P 500 index as well. So you could have many other companies that may not be performing well, but however, because of the weightage of the Mag 7 coming up to almost a third of the entire index, it's going to pull up that entire index itself. Conversely, when these seven, should these seven stocks uh, s- suffer a large pullback or correction, is going to drag down the index in a big way as well. However, in such a scenario, you could also have the other companies that could be outperforming as well. So it doesn't mean just because the entire index is falling down together with the Magnificent Seven, it doesn't mean the rest of the companies in this index are going to suffer the same fate. You could also have some dispersion or some divergence in the performance between the various makeup or holdings of the S&P 500. All right. Next is the Invesco QQQ ETF, or otherwise commonly known as the triple Qs. This is an ETF fund that tracks the performance of the Nasdaq 100 index. So, what is the Nasdaq 100 index? Basically, it's an index that includes 100 of the largest domestic and international known financial companies. So basically, the big tech companies that are listed on the Nasdaq stock market based on market capitalization. This ETF was launched in March of 1999. Right. So when we look at the holdings of the triple Qs, right, we can see once again the big seven or Magnificent Seven lining up the top 10 holdings as well. So you've got Apple, Microsoft, Amazon, Meta, Nvidia, Tesla, and Alphabet A class. When you add up the Magnificent Seven here again, you get a much higher total weightage. You get a total weight of nearly 37% or 40%, right, uh, which is almost half, right? Basically, it's a very heavy weightage of the entire index. So similarly, like the SPY, when you see the seven Magnificent Seven gain very strongly. Of course, it's going to pull up the entire triple Q ETFs. Conversely, when you see them performing badly, it's going to drag down the entire index as well. And as you can see, this is a very technology heavy index, right? You can see the allocation, almost 60% of the allocation is focused on technology, 20% on consumer discretionary, and a little bit on healthcare, telecommunication, industrial, and so on and so forth. But generally, you can see it's a very tech heavy allocation, whereas when you compare it to the SPY, more well balanced ETF. So sometimes when you see the SPY or the triple Qs rising more than the SPY, it's because the Magnificent Seven are probably outperforming much more strongly. So that's going to have a bigger impact on the Invesco triple Q ETF, right? Take note the S&P 500 is a much more diversified index. It does have exposure to the technology sector, but because it's much more diversified, big swings or big gains and big losses in by the Magnificent Seven have a slightly less impact as compared to the Triple Q. So if the Magnificent Seven are rising very strongly, we're going to see a much more better outperformance in the Triple Qs versus the SPY. Conversely, should we see the Magnificent Seven pull back very strongly, it's going to drag down the Triple Qs more than it would the SPY. All right. But also, whereas the SPY is focused primarily on US large cap US stocks, there is some non-US allocation for the triple Qs, where it is very tiny. Majority of the allocation is in stocks that are listed on the US stock exchange, right? But otherwise, you do see about 3% of it in China, Brazil, the UK, and the Netherlands, but they are very tiny allocation. All right. Okay. So let's now look at their recent Q4 earnings. Let's see what's been up, how have they been performing, right? We'll just do a quick review of how they've performed over the last 3 to 4 quarters. All right. Starting off with Microsoft. So we'll start off with uh, companies with the largest market cap in descending order, right? So Microsoft released its fourth quarter earnings for 2023 on January 30th. So on the right, you have the forecast number for EPS and revenue, and on the left is the actual result. So as you can see, EPS and revenue both beat the forecast, right? So we had stronger than expected earnings and stronger than expected revenue as well. So as you can see, over the last 5 quarters, in general, Microsoft has posted better than expected earnings with regards to revenue and forecast. So revenue has generally trending higher. You can see the line, the bars getting higher. The blue bars represent revenue. The gray bars represent EPS. In general, you can see, well, overall, you can see revenue and EPS has beat the respective forecasts over the last 5 quarters, and revenue has also trending higher. EPS too has been trending higher as well, except for the recent result. Right, you can see EPS pulled back to about $2.93 per share, whereas in the third quarter it was almost $3 per share. So profitability has taken a little bit of a hit, uh, despite revenue continuing to rise. So overall, still good, healthy figures, of course, with regards to the results. Okay, next is Apple. Apple, you could see in the last quarter of 2022 and in the first half of 2023, is revenue and EPS was declining. Although you could see revenue and EPS has beat the respective forecast of out of the 4 out of the 5 last earnings or last quarters. Generally, you could see at the end of 2022 and the first half of 2023, both revenue and profitability was sliding lower. However, in the second half, you can see revenue and EPS both pick up. And not only that, they've been trending higher, they've also been coming in higher than the forecast, which has been providing a bullish catalyst for the stock itself. Fundamentals have improved when we look just purely at the top line, right, as a overhead view for revenue and earnings per share. They have improved pretty well in the second half of 2023. Right. Next is Nvidia, which is the darling of the current theme, right? Driven by AI, cloud computing, and so on and so forth. So as you can see, Nvidia's revenue and EPS has accelerated tremendously, right? Revenue was about just over 5 billion in the first quarter of 2023, and second quarter of 2023 about 7 billion here, 6 to 7 billion. But now you can see revenue has topped 20 billion in the latest earnings results. Right, so once again, not only is revenue and EPS been trending much higher, you can also see that over the last 5 quarters, uh, earnings and revenue and earnings have beat the forecast as well, right? They've been coming in strong, they're rising strongly. So you can see this is a real growth engine for Nvidia. Next is Google. Um, Google also has been posting pretty decent earnings results over the last few quarters. Revenue has been trending higher. EPS has also been trending higher. And at the same time, you can see overall revenue and EPS has come in their respective forecasts as well. Next up is Amazon. Amazon in 2022 and early 2023 was sort of sliding lower in terms of the revenue trajectory. Revenue was heading lower. EPS also was pretty weak. But in the second half of 2023, we can see revenue and EPS come back in a strong way as well. So they've increased quite steadily over the last 2 to 3 quarters. So once again, good earnings results from Amazon as well. Next up is Meta. Meta too as well, sliding lower in 2022 with regards to revenue and earnings, have rebounded in a strong way as well. So you can see the general theme so far already in the second half of 2023, third quarter, fourth quarter earnings, as well as have really picked up for majority of the Magnificent Seven, right? So you're seeing uh, strong fundamentals and strong earnings and revenues in the second half of 2023. Next up is Tesla, which is, like I said, is the only uh, company out of the Magnificent Seven that has performed poorly in terms of year-to-date performance of its share price, as well as its revenue and earnings as well. Right, you can see revenue has pretty much flattened. Right, it's not gone above 25 billion for a while. Revenue is mostly flattened here, whereas EPS, earnings per share, has been trending lower as well. So profitability has been dropping for this automaker, and at the same time, we've seen a majority of misses as well for both EPS and revenue. So the last five, over the last 5 quarters, both revenue and earnings have missed its estimates most of the time. And at the same time, we're seeing uh, top line revenue flatten, as well as the earnings per share or profitability of this company dropping lower as well. So you can see the Tesla is the weakest of the bunch, and perhaps uh, in a couple of months or so, it could be replaced by another tech company that is performing well, right? It all depends on who's going to do it. Is it going to be Jim Cramer, or is it going to be from that? Is it going to be that Bank of America analyst Michael Hartnett, who will once again coin a new acronym for these companies? All right, now. Right, is there any questions before we move on over to the charts and trading view? Is there anything else? Is there any questions you have in regards to what we have covered so far? Right. Okay. If not, then all right. If there are no questions, then let's just dive into the charts and trading view. Right. Since we'll take a look at Tesla first. Right. Okay. So before I do that, let's just look at the chart for the SPY. So the SPY is the ETF that which tracks the S&P 500 index. As I mentioned, Tesla has been the one that's been weekly performing. So let's do a comparison. Let's compare the performance of the SPY with Tesla. This is. Oh wait, hang on. Okay, let me see if we can try it. See percentage scale. Price scale. Okay, let me see if I can. Wait, just let me adjust this. Right. Okay. Here. This is much better. This is what I was trying to do. Okay. So, uh, in the white and green candles, this is this these candles are of the S&P 500 index, the SPY, and the orange line is the share price of the of Tesla. So basically, as you can see, uh, for most of or rather since 2022, right since the pandemic bottom here in March, April, the SPY and Tesla have traded in tandem. So the positive correlation between them has been really strong throughout most of the time. So we had this strong bull market from March of 2020 all the way till December 2021. You could see the general trend for both Tesla and the SPY ETF was in the same direction. So this tells us this is a strong positive correlation between the two. Similarly, the stock markets pulled back, the SPY pulled back, the share price of Tesla pulled back as well. You can see that pullback happened together. So the positive correlation continues to exist. However, there was some divergence from October of 2022 onwards. You can see that the SPY actually bottomed in October of 2022, whereas Tesla continued to make lower lows. The SPY actually stabilized and has continued to grind higher. Tesla actually continued to drop even lower, and then only in January of 2023 it sort of bottomed and started to rise together with the overall index. However, after this market pullback in the third quarter of 2023, has continued to drop lower, whereas the SPY index, along with the other Magnificent Seven stocks, or the Magnificent Six, the other six stocks, have actually rebounded very strongly in October of 23 onwards to rise to make pretty much new all-time highs. So you can see there's a major divergence between the performance of the SPY and the Tesla as well. Right, this was primarily due to the weaker than expected earnings results that I showed earlier. Right, over the last 2 to 3 quarters, our revenue for Tesla has flattened, whereas earnings per share or profitability has been sliding lower, and also it has also missed the respective revenue and EPS estimates over the last 3 or 4 quarters as well. So fundamentals are poor for Tesla, and which is part of the reason why it is actually continuing to slide lower and has not rebounded strongly like how the other stocks in the Magnificent Seven have done so. Right, so you can see very clearly there's a strong divergence in the share price performance of Tesla and the SPY index, primarily due to poor earnings over the last 3 to 4 quarters. Right now, if I were to compare this with example the market darling, which is Nvidia, you can see generally the positive correlation has uh, remained intact. So when SPY was rising. Generally, Nvidia was rising as well. When SPY was pulling back, briefly entered a bear market. Nvidia pulled back as well. And similarly, as prices rebounded or stabilized in November of 2022 and started to rise, the index rising, Nvidia rising as well very sharply as well. So you can see very strong positive correlation between Nvidia and the SPY as well. And then when we look at outperformance, let's now compare the SPY with the triple Qs. Right? The triple Q is the ETF that tracks the Nasdaq 100. So you can see that because a lot of the moves or recent moves since the middle of 2023 right, has been primarily led by the Magnificent Seven. Right, so these seven companies have a larger impact on the triple Q ETF. They also have a big impact on the SPY as well, but because they make up 36% of the triple Q ETF, this ETF is going to see a much larger outperformance, whereas for the SPY, the Magnificent Seven make up only 26%. So this is why you will see outperformance in the triple Q to the upside more when the Magnificent Seven rally hard. Conversely, when the Magnificent Seven pull back drastically, it's going to drag down the triple Q ETF more than the SPY ETF. Right? So that's why we can see sometimes this greater outperformance in the triple Q ETFs and also a larger pullback in the triple Q ETFs as compared to the SPY ETFs. Right? So that is why it is important uh, to know how these Magnificent Seven companies have a huge impact on the respective indices, right? Basically, the S&P 500 index as well as the uh, Invesco Triple Q ETF, which is the Nasdaq, which tracks the Nasdaq 100 index. All right, so we've seen how the impact of the Magnificent Seven can have on the respective ETFs, the Triple Qs and the SPY. Now let's dive into technical analysis for uh, the individual stocks. So let's start with Nvidia, right? Nvidia is the market darling. So let's start analysis on that. So I'm on a weekly time frame. So you can see price is made an all-time high at about $973. Right, this is the all-time high for Nvidia. I'm going to, of course, label this as my first resistance. This is the major resistance level here. And you can see as I zoom out, the returns, share price performance uh, has been tremendous for Nvidia. Right? So because of this huge acceleration as well, it can make technical analysis a little bit difficult with regards to finding a suitable, a strong support level, or to identifying a strong support level, as well as to identifying uh, the next resistance should price break above the all-time high. I suppose let's try and do that. Okay, uh, we can think we want. Let's see, we can first do a projection. No, projection's gone as well. Okay, so in terms of support, because we had this huge gap up here that occurred on the week starting 26th of, sorry, 4th of March, and I'm quite inclined to use this level here to identify as the first support here, right? Potentially, as you can see this week, after making the high in the week of 4th of March, or rather the first week of March, NVIDIA has actually pulled back and did try to edge a little bit higher, but this week as well, uh, the share price has pulled back. So where it could find where I do see the first major support on the weekly chart is at $823 dollars and 94 cents. Right, perhaps we can even do a Fibonacci retracement. So the low is from here, 10th of October 2022, going up to this high here. Let's pull up all the fibs. Let's see if any of the Fibonacci levels align with anything useful. Right, okay. We do see 23 over here, 38 here. So let's just keep 23 and 38 for now. Right, so these are the current support and resistance levels. So although the fundamentals for NVIDIA have been good, as we saw in the earnings over the last 4 to 5 quarters, perhaps it would be good to wait for prices to pull back. And should we see it drop all the way down towards the region of $820, which is where the first support has been identified, this could provide help us identify a suitable entry as well, because no one wants to buy the stock at the all-time high at $980 and having to see it drop uh, down to 880, so dropping nearly 10% or more in a matter of 2 to 3 weeks. Right? That's the worst thing you can do is buying the stock at its all-time high and seeing it drop 10% in the next 2 weeks. So with that, despite uh, seeing strong fundamentals in terms of revenue and earnings per share, as well as forward guidance, the share price is pulling back as we speak, and we could get a better opportunity uh, to get in on Nvidia should it return to around $820 per barrel, right? At $820 per share, right? We can also see on the weekly chart that this is a pretty decent ascending trend line here. Price has bounced off this trend line a couple of times, right? So right now it is testing this ascending trend line. So if this trend line gives way, we're quite likely to see price fall further all the way down towards $820. Right, let's zoom in into the daily time frame and see if we can fine tune the analysis. Right, we can also probably do another Fibonacci retracement from here, this low on 31st of October 2023, going up to the high. Let's see if any of the fibs line up well. 23, okay, 23 is here, close to where the first support is, so I'll keep 23, 38 as well. There's a pretty another decent overlap here. So let's once again keep 23 and 38%. Right, so you can see that there's indeed a pretty strong support zone that starts from about $820 to about $840 for NVIDIA. So prices have been pulling back, has consolidated, and should this okay, now that I look at it on the daily time frame, you can see this trend line has already actually been broken once here in mid-February. But generally, after that, it still continue to respect this trend line here. So although it's not because of this breakout here, this is not the most significant ascending trend line, right? But I think it could still help us to form, help us in our technical analysis. So should this trend line give way once again, then of course we're likely to see Nvidia pull back even further towards the region of the first support. The next support zone is likely to come in around here, which is bounded by 38.2% Fibonacci retracement on the weekly time frame. Sorry, the 23% Fibonacci retracement on the weekly time frame, and the 38.2% Fibonacci retracement on the daily time frame here. Right. So we like to see the next. If the first support level at 820 doesn't hold up, and we see prices correct even more, and the next strong support zone or relatively strong support zone should come in around the $760 per share region. All right, okay. So just checking incoming messages on the chat. All right, okay. So let's continue. Right, so the next major support, okay, the first support zone comes in at about $8,830. The next support zone for NVIDIA is likely going to be around here at 750 $760 here. Right, what about resistance? Right, we know the all-time high is at $974, but what would be the next potential resistance level that's going to lie above it? So, as I said, price has made new all-time highs. It's going to be quite difficult to find new resistances based on technical analysis. Perhaps we can, but let's see. I can't see any projections. There's no. The only thing I can probably try and do is a projection. May not be the best one, but let's see. So I'm going to start this projection from here. Point one starting on 21st of Feb. Second point going up to the all-time high, 8th of March. Third point ending here on the 11th of March. So you can see all the. Let me just label it much more clearly. Change the color. Right. So the key Fibonacci projection levels. They start from 61%, 78.6%, and 100%. So that's what I've kept on. So as we can see, we are using projection to help us identify potential resistance areas should price break above this the all-time high that was set at 974. Right? So because we don't have anything else to work with, we don't have any other past swing highs or pullback resistances to reference. Unfortunately, we're going to need to use uh, Fibonacci retracement tools to help us identify a suitable resistance area. So next resistance here, which is going to be at 1,035, $1,000, $1,035. As a take note, this ascending trend line is pretty important despite price breaking out of it on 20th of February. But in general, you can see uh, during this ascent, uh, the share price of Nvidia has respected this trend line most of the time. So should we see price break below this trend line once more, it is likely going to fall all the way down towards $820. And the next support level, should price correct even more, is going to be around $750. Right? So this is the current analysis for, sorry, these are the current support and resistance levels for NVIDIA on the daily time frame. Right, so let's move on over to, okay, maybe we can also incorporate stochastics, stochastic oscillator here, right? You can also see when the stochastic drops to oversold positions, right? But you can see Here, when the stochastics drop to oversold positions, it does help to identify a potential pullback opportunity for Nvidia as well. Right, so as you can see here, right, so when stochastic oscillator generally drops below 20, it does potentially signal sold conditions. And in this case, we can see the stochastic oscillator for NVIDIA has actually dropped to a low of 5, dropped to a low of 5 several times. So whenever it has reached around the region of 5, price has actually bottomed and made a short-term bounce. We see this happening on 11th of August 2023. We saw it again on 21st September 2023, and then again in October 2023. So maybe perhaps using the stochastic oscillator as well when it reaches uh, the region of 5, it does seem to indicate a potential bullish reversal or potential short-term bounce for the stock in Nvidia. So that may be a better combining using stochastic oscillator in our analysis may help us to identify a suitable buying opportunity or entry opportunity for Nvidia. Right, definitely with price trading close to all-time highs and also with the stochastic oscillator turning lower now, this may not be a good opportunity or good time to consider entry on Nvidia. Right, this is just looking when we look at purely technical. Here, whenever the stochastic oscillator has hit 95, right, when the stochastic oscillator has hit 95, price has usually stalled and then it has pulled back a little bit. So when we look here, right, every time the stochastic oscillator has hit 95 on the daily time frame, prices have stalled and it has pulled back a little bit. And as the stochastic oscillator reverses and to move higher, coming close to about the region of 5 and then moving higher, it does help us to identify a much better entry level for NVIDIA as well. And you can use this analysis on the other Magnificent Seven stocks as well. And not only on the Magnificent Seven stocks, you can also, of course, use it on most other equities as well. And also, you can use this analysis on the SPY ETF and the Triple Q ETF as well. You can, of course, use it on the index ETFs for sure. Right, as of now, as you can see, all right, despite here in January, despite the stochastic oscillator hitting 95, price still continued to move higher. You can see a very strong bullish rise here, right? So this is also another point to take note. Just because stochastic oscillator has hit 95, it doesn't mean an imminent bearish reversal is on hand. Price can always go higher, but you can see however, in the past as well, when the oscillator has hit 95, we have seen a stall in the rise of the share price. And as the stochastic turns lower, we have seen prices pull back as well. And then when the stochastic oscillator hits the level of 5 and starts to reverse and move higher, it does signal to us or does help us to identify a potential bullish reversal, which then gives us a better entry price for this company. So as you can see, after making this all-time high here, price is pulling back. You can also see the stochastic oscillator moving lower, and should this ascending trend line give way, if share price breaks, like if today and tomorrow, if the share price for Nvidia breaks this ascending trend line, we are likely to see it fall towards the first support at about $820. And then the next support that I see is around at $750 per share. Right. So this is what I have for Nvidia. All right. So with that, let's go on over to uh, triple Qs. Let's do the analysis on the Nasdaq 100. So triple Q is the ETF or the instrument that tracks the Nasdaq 100 index. So let's see. As you can see here, this index has pulled. Okay, once again, I'm on a daily time frame. This index has risen very high. And of course, we look on the monthly time frame. Price made an all-time high here. This was the all-time high at 448. So of course, this is going to be our first resistance. The previous all-time high was around here, the swing high that occurred in December of 2021. This could now be a potential support area So I'm going to identify this for now as a first major support for the triple Qs. And also similarly here, you can see when the stochastic drop below 20, drop below 10 on the monthly uh, time frame. You can see there's also signal uh, a bottom in the in the share price as well. So similarly, when we look across this level here, so similarly when the stochastic oscillator on the monthly chart for Invesco triple Q ETF hit uh, this level here at 14 in February of 2009. This was when it sort of bottomed as well, and share price for this ETF continued to rise very strongly. Similarly, here we can see price finding a very strong bottom at around the region of $270 here. Price consolidated around this region for a period of 4 to 5 months before finally bouncing off it very strongly. Slowly. Once again, the stochastic oscillator on the monthly time frame has helped us to identify a potential bottom here as well. So this is how we can use uh, the stochastic oscillator to help us identify um, major market bottoms across various time frames. Right? So especially for indices and equity markets, right, and the individual share price of companies. It's also good. It's always good to do the analysis on the monthly and weekly time frame first to establish the larger trend and the major oversold and overbought conditions, and then you can zoom in into the lower time frame, such as the daily time frame, to fine tune the analysis. Right. Okay. So these are all right. This is the chart for the triple Q on the monthly time frame. So okay, I'm going to get rid of this support here at 70. Let's go on. Now let's move down the time frame. Okay, but before I do that, I can also do a Fibonacci retracement here. I'm going to run this retracement from here, which is on 5th of November 2021, ending with the low here on the 3rd of October 2022. What I'm looking for are extension levels. I'm be looking for extension levels. The key extension levels are 137 and 161%. Extension levels help us to identify where price could potentially reach after making a swing low here. Right, so price after making a swing low here in December of 2022, price started rising strongly. The Fibonacci the extension Fibonacci retracement to help me identify extension levels, which then help me identify suitable resistance levels. As you can see very clearly, in March, price has actually stalled at exactly the 127% Fibonacci extension level here. So because of that, also I'm going to use the 161 extension level to help me identify the second resistance should we see price continue to move higher, right? Then I can also use a Fibonacci retracement starting from this low here on the 3rd of October, going up to the recent high here. Let's pull up all the fibs. Let's see if any of the Fibonacci levels align well. Right, we can see that 23.6% Fibonacci retracement aligned very well with the swing high that occurred in December of 2021, which is where the first support has been identified. And when we can see this pullback here that occurred in October of 2023, this pullback also aligns very well with the 50% Fibonacci retracements, and that's where my second support level is going to be for the triple Qs. Right. So as you can see, the retracement levels that are relevant in the current analysis is at 23.6% and 50%. So let's keep those two levels. Right. So here you can see quite clearly where the major support and resistance levels lie for the triple Qs on the monthly time frame. Right now, with that, now that we know where the major levels are, let's zoom in over onto the lower time frame. So let's move on now to the weekly time frame and see if you can fine tune the analysis. Right. Similarly, here you can see the stochastic hitting 12 or coming close to 12, and each time it has done that, typically it has signaled a potential bottom or a short-term bottom in price, right? So you can see here in June 2022, prices bottom, it retraced a little bit higher, pulled back once again. But in October 2022 and December 2022, that's when price really formed a true bottom here at around $260 per share, and then that's when it reversed very strongly. Not only did it reverse strongly, it also broke out of a descending trend line as well. You can see there was a descending trend line here that took place, that had been formed since November of 2021, and this descending trend line was finally broken out of as well in January of 2023. We also had a bullish breakout signal on the weekly time frame, price breaking out of this descending trend line, signaling a potential bullish breakout in January of 2023. We also saw find a double bottom at $260, and also we had stochastics on the weekly time frame indicate short-term a potential oversold conditions as well on in mid-October of 2022 and in early Jan 2023. So we had a few technical indicators that suggested that price had indeed bottomed here in January of 2023. We see a breakout as well of the descending trend line, and then we also see the stochastics moving up strongly, of course, as price moves away from $260. Right. Similarly, in October of 2023, we see stochastics moving closer towards oversold conditions. Once again, price finding strong support here, at $345. And as price bounced off this level, you can also see stochastic moving higher. That's when the next run occurred, and then you could see a bullish breakout occur as well. So the previous swing high resistance occurred on November of 2021, which was at $405. And then as price approached this level here in December of 2023, last December, price stalled for a couple of weeks before finally moving higher again. Right. So you can see how we can use the combination of stochastic oscillators, identifying descending trend lines, ascending trend lines, to help us identify potential bullish breakouts as well as potential bearish breakouts. And speaking of bearish breakouts, there's a strong ascending trend line now. Right, we do see a strong ascending trend line here. Now, should price break below this level, then of course it could trigger a potential bearish breakout on the triple Qs, right? So that if it were to happen, if this potential bearish breakout were to happen, then we can use the region of the first support, which is $405, to identify a suitable support. So should you be considering any short positions on the triple Qs, right? You decide to enter at about 430 or about $430. Should price break below this ascending trend line, triggering a potential bearish breakout, then of course you can target the region of $400 as a potential take profit zone. Right, this is how we can use the analysis to help us try identify potential short opportunities as well. Right. So similarly, I wouldn't be buying the triple Qs at where price is currently trading. I would like to see prices. I would like to see price pull back, and I can use the combination of a support level as well as the stochastic oscillator to help me identify potential oversold conditions. And then as price forms a bottom and starts to move away from a potential bottom or potential support area, that's where we can probably have a higher level of confidence that prices are going to rebound higher, right? All right, okay. Are there any questions before before we wrap up today's webinar? All right, okay. Hi, Casey. You're talking about Pika. All right, okay. Well, what is that? Let me see. So I'm just looking at some of the comments that are coming in. It's okay. You've dropped the ticker symbol for Pika, which is a Paka Inc. Right? So it's a automobile company, right? Large commercial trucks. All right. Okay. So got an idea. Long chart entry at 121, stop loss at 114, price target 135, 2 to 1. Let's see what the fundamental. Although this is not a tech related company, but yeah. Okay. Let me see if there's time for me to take a look at this. Otherwise, I will just very likely wrap up with looking. All right, let's wrap up the session by looking at Tesla. Right, since it's been the worst performing stock out of the Magnificent Seven, let's wrap up today's session by finishing the analysis on Tesla. So once again, let's start on the monthly time frame. Similarly, when we look at stochastic as well, right, the last time stochastic hit the level of 10 on the monthly time frame, you can see that the share price for Tesla bottomed as well. This was in June of 2019, and then it rose quite rose quite strong. Similarly, as stochastic oscillator indicated oversold positions, oversold conditions in January 2023. This is where the share price bottomed once again, right? Finding strong support around 100 and $110 and rebounding higher as well. So you can see as well across various time frames how the stochastic oscillator can help identify major oversold conditions, which then signal a potential rebound in prices, right? Now, looking at that, I also see on a monthly time frame, I see a strong descending trend line as well that's occurred since December of 2021. You can see prices fail to break above this descending trend line. It's something that's been going on since nearly 2 years now, right? So you can really see this is in a bearish momentum, right? Okay, with that, let's move on over to the weekly time frame. So we can try and adjust. Okay, I can try another descending trend line as well. So here you can see once again price is clearly trading under this descending trend line as we don't see any indication of potential bearish breakout. So should price break above 220, maybe due to better earnings, here at Q1 earnings for 2024, if you see strong Q1 earnings for 2024, potentially we could see price rise higher, and where we could get a bullish confirmation would be if price breaks above this starting trend line, which does seem to be in the region of 200 and $220 per share. Right, as of now, Tesla is indeed in a strong downtrend. Every time the stochastic oscillator has indicated oversold conditions on the weekly time frame, we have seen prices form a short-term bottom, but the rebound has been strong. Right, the retracement has always been uh, restricted or capped by the descending trend line here. We're just finally ending with the analysis on the daily time frame. Once again, stochastic is indicating a potential oversold condition here. We see prices rising strongly, so we could see a short-term bounce uh, on Tesla. However, this may just set up a better opportunity, a better short opportunity as well, a better entry for the short opportunity. So on the daily time frame, we can see another descending trend line as well here. Prices went to resistance here in beginning of March, and should price rise up once more, coming to the region of 180 and $190, price could potentially run into resistance here. So this could be a place where or zone where price could once again stall and reverse to drop lower. All right, okay. So we've come towards the end of today's webinar on the Magnificent Seven. I hope this has been a great session for all of you. Uh, do look out for all upcoming webinars by IC Markets for the rest of this week. And I wish you all the best in your trading journey. All right, take care and catch you all in the next webinar.